Hi students, now in this video series, now we are going to learn about what is meant by actually introduction to audit, audit assurance service, assertions, and we need to see uh, ethical consideration of auditing, digitalization in auditing, how we are going to address what is the actually auditor's role in digitalization. Likewise, now without taking much time, I will show you how to deal with this chapter D. Again, I have divided into six subparts. For example, introduction to auditing, where you are going to learn about the definition and audit jargon, then assurance services, then role of and purpose of auditing, and auditing in a digital environment, and sustainability reporting and assurance, then the governance and ethical consideration in auditing. These are the six parts that we are going to deal under chapter D, foundations of auditing. Right now, this is purely based on the external auditing with the assurance service as well. Now we will see what we are going to do under this particular chapter. Right. Without talking much, we will go to the learning outcomes. These learning outcomes are for entire lesson, not for the one part, introduction to auditing, but entire sub six parts. Right. For example, purpose of auditing, urgency theory, and it links to audit necessity and understand professional skepticism, differentiate assurance service and services and levels of assurance, explain financial statement assertion, describe the big picture of the audit process, discuss digitalization impact on audits, define sustainability reporting and assurance. Now we will see introduction to auditing. Right. Now here you need to maintain some short note. I will be explaining, then you need to jot it down. First of all, we need to write down the meaning of auditing, the definition of auditing, and then and there I will be explaining the one word one by one. Right. Now let's say auditing is given an opinion. Auditing is given an opinion on financial statement. Auditing is giving an opinion on financial statement, whether the financial statements are prepared in accordance with applicable financial reporting framework. In accordance with applicable financial reporting framework. The second one, whether the financial statement are pre-prom material misstatement, you jot it down, you can jot it down those things. Whether the financial statement are pre-prom material misstatement, then whether the financial statement give true and fair view. Whether the financial statement give true and fair view in all material respect at assertion level. In all material respect at assertion level. That is the meaning of the auditing. Right? The definition of auditing, we will take one by one, and I will be explaining each word. Then and then you can understand what we are going to do. Right? You see, audit, independent health check of financial statement, independent, dependent on independent task. Just assume, insurer. There is insurance company, insurer is there, and you are here. Now let's say, not you, let's say there is a person called ABC. ABC have cancer. ABC have a cancer. Now ABC wants to obtain life insurance policy. Now he knows well, if he is going to say he has a cancer, definitely the insurer will not give an insurance policy, especially life insurance policy. There will be some alternative arrangement. Thinking that insurer will not give the insurance policy, what the insured means ABC person is going to say, let's say, go to the insurer and say, I do not have any diseases, any problems with me, with my health, please give me a life insurance policy. Now we have a question that of insurer and in ABC company, ABC person means puta the insured. Rakshitaya. Rakshakya kila kindi Rakshana Samagam. Insurer. Otherwise, you wondering that what is the insurer, what is insured? Okay. Insured means Rakshitaya. Insurer means Rakshana Samagam. Now we have a problem that when you are going to give a verbal oral expression regarding, you do not have any problem, you do not have any disease, will the insurer rely on it or not? No, exactly no, Bhuta. Right, exactly no. Then what is the insurer is going to do? Insurer is asking you to go for a doctor and obtain a medical report and come. Now what is the treatment here? You are sending to a doctor and you must obtain a medical certificate and you are again coming to the insurer. Then doctor say you do not have any disease. Now insurer will rely on that medical report. Why? The public trust on the profession called doctor. Public community will trust doctors because they have completed right examination, they have completed knowledge module, skill module, they have completed their experience. Ultimately they become a doctor and public will say, yeah, this is a doctor. Then doctor is the expert of that particular field giving an opinion. Then doctor's opinion will be independent, not dependent. It is not like you are saying you do not have any disease. Now doctor is saying that through a medical report you do not have any disease. Now it will become what? Independent document. And insurer is also rely on that particular document, that particular medical report. The reason why? Independent third party issued and doctors are the expert of that particular field. Now that is totally fine. You understood the concern. Now just assume there is a company called ABC. ABC company is now not going to obtain a life insurance policy. Now we will take another example. Now ABC Private Limited is going to a bank for obtaining bank loan. ABC company, just simply ABC company is approaching a bank to obtain a bank loan. Now medical check should be there, but now bank cannot ask ABC company to go for a doctor and check blood, check pressure. Why? It is not alive. Now instead what the bank is recommended to ABC Private Limited company is, now bank is think, how I am going to evaluate the financial performance of the what is the performance of the company. Then bank realizes, financial statements are there. Financial statements. Through financial statement, bank can verify. But we have a problem that why? Financial statements are prepared by the ABC Private Limited company. It's similar to you are saying you do not have any disease, but bank is not going to rely on the ABC Private Limited financials. Bank asks ABC Private Limited company to go for a not doctor, not go for an audit firm, right? Similar to doctor for this particular scenario, go to the audit firm and take independent audit report. If ABC company comes with independent auditor's report, now totally fine. Why? Auditor is the expert of that particular industry who possess relevant experience, knowledge, and skill, and he has the ability to come to a conclusion through financial statement after doing some several procedures. That's what we are going to do here. Right? Now you see, for auditor, public trust is there. Public will trust on auditors. Public will trust on auditors. Therefore, what you are going to do is, you are going to get your financials audited by an audit firm. Now we have a problem that what was the reason for audit? Independent audit is financial statement are prepared by management of company, board of directors. They are the responsible party. Those charged with governance. In this case, for the board of directors, we say those charged with governance. That's how we are going to interpret them. Now we have a problem again. What is the problem? You need to see, right? Like this is the case. You need to evaluate why shareholders want to see the audited financial statement. Now there is a reason for that. That is called urgency problem. Urgency problem means what? Someone is acting on behalf of other. Someone is acting on behalf of other. When someone is going to act on behalf of other, then we have to face those problems. What are they is, for example, let's say in urgency theory, someone is acting on behalf of someone else. No, then shareholders are the owners of the company and management is board of directors. Management are utilizing that resources. Now we have a problem, no? Owners of the resources are different from the users of the resources. Now shareholders are known as what? Yes, principals, where your management will become urgent. Then management is utilizing the resources of shareholders on behalf of them. They mean shareholders. At that time, urgency complete is there. What is the urgency complete? Shareholders wanted to see the progress and the wealth maximization of the company, whereas management wants to maximize their own benefits. That's the conflict of interest. Due to this conflict of interest, there is an agency problem. That is why shareholders are the owners of the company. Management is the party who is utilizing resources. Then now management is not going to rely on those financial statement prepared by shareholders are not going to rely on financial statement prepared by management. They need independent assurance to this particular financial statement. That is why auditors are coming to the platform. Now you understand that. Now, the most private limited companies, shareholders and the management are same. Those parties are same. Shareholders and the management are same. No different at all. Now, you understood that one also, agency theory. Now, financial statement, that is a kind of a set of financial statements. Now, under financial statement, you have 5. What are they? Statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flows, and notes to the financial statement. Those are the set of financial statements we have. Now, that is also fine. Build confidence in financial information, investors, regulators, and stakeholders also. How? Confidence in financial information, especially in the reliability of financial statements. Then users know, for example, investors, if you are a future chartered accountant, after being qualified as a chartered accountant, you have enough money, you have businesses, then you are going to invest. When you are looking for investment opportunity in a Colombo Stock Exchange, especially in the public limited companies, then you see how you are going to evaluate the performance through financial statement. Then those finances should be reliable. Otherwise, your decision may go wrong. Regulators, right? Inland Revenue Department, right? They are looking at what are the financial statement. Based on the financial statement, you are prepared your taxable profit and pay taxes. Then they are looking at that particular figure also. Then stakeholders. Stakeholders mean for the vast category. Stakeholders means not shareholders. Shareholders is a part of stakeholders. Then customers, suppliers, employees, the governments. Then you see management. Those are the stakeholders as a whole. Then they will rely on you. They are whatever evaluating your financial performance also. How good you are, how your financial healthiness of your company. Likewise, then the last one, investors in Sri Lanka rely on audit reports before purchasing CSC listed shares. And definitely, you are going to see financials. Based on financials, you are going to decide whether you are going to purchase shares or not. Now that is not the problem. You write down your whatever the meaning of your auditing. What is the meaning of auditing, Putta? Auditing is giving an opinion on financial statement, whether the financial statement are prepared in accordance with applicable financial reporting framework, whether the financial statement are pre material statement, whether the financial statement give true and bear in all material respect at assertion level. Now we will take basically you are going to see opinion. Opinion are 4 types, Muta. We will be discussing in detail in another chapter, but basically opinion are 4 forms, right? Unmodified, qualified, adverse, and disclaimer of opinion, right? And this like that. For example, let's say you are schooling. Sometimes at the moment also you are schooling after completing double AT, you got exemption and no, after completing double AT new syllabus, this subject is exempted. Just say after completing your A levels, you are here. Now let's say I am going to visit your school and ask about you. Then I am going to meet your school teacher and ask about you. How about this student? Then the school teacher is saying that he is good, perfect, fine. One kind of opinion. Second opinion, he is good, she is good, but there is a problem. Naughty. Third one, he is not good at all. Fourth one, actually, my school teacher is saying to me, actually, I don't remember that student, therefore, I cannot say something about him or her. 4 times. Auditor is also doing those 4 times, right? Auditor is doing unmodified opinion. Unmodified opinion is auditor is saying financial statement are okay. You are not going to say absolutely 100% correct. You are providing what kind of assurance you are providing? Reasonable assurance. What is tamak and right? In auditing, we are providing reasonable assurance, not absolute assurance. What are the reasons for that? One thing is external auditor is performing procedures on sample basis. External auditor is performing audit procedures on sample basis. Other one is we are evaluating historical data. Historical data. That is the second thing. There are many more, right? We will add. Basically, you remember the historical data and the sample basis. Then we will move to the what we call. Yes, excellent. Other parts also. Now what we are going to do. Now unmodified means financial statement are fairly presented. Qualified opinion. Financial statement is good, but in this area there is a problem. Like your school teacher said, you are good, but there is a problem. Third one, financial statement are not present fairly. Not fairly. You are not good. Then disclaimer of opinion. That means the auditor is not going to express an opinion on financial statement. Rather, right, you withdraw the engagement. That means you are going to say you do not have any evidence to say something about financials. Like your school teacher said that school teacher don't have any idea about you and cannot express anything regarding you because there is no evidence. Likewise, opinion is also four types. Now first the first line is okay. Now whether the financial statement are prepared in accordance with applicable financial reporting framework. I am explaining the definition of audit. Whether the financial statement are prepared in accordance with applicable financial reporting framework. What are the applicable financial reporting frameworks? First one is what? Full SLFRS. That means Sri Lanka accounting standards. LKS and SLFRS. Second one, SLFRS to SME. That is a kind of one standard. Sri Lanka SLFRS plus ME, right? That means Sri Lanka financial reporting standard on small and medium size enterprises. First one is Sri Lanka accounting standards. Then the third one, SLFRS for small entities. Sri Lanka Financial Reporting Standard for what we call small entities. And last one is Sri Lanka Statement of Recommended Practice for Not-for-Profit Organization. Those are the four types of financial reporting framework. Those are providing some guidance. For example, now when you are going to learn accounting standards, you have first scope, right? What is covering by that particular standards? Then that particular standard is having its own definition. Third one, that particular what we call accounting standard when you're going to learn. Third one is accounting treatments. How you are going to treat different scenarios under the scope of that particular accounting standard. Last, you need to provide some disclosures. When you are providing some disclosures to the what we call financial statement, there is a specific disclosure in that particular accounting standard. You need to provide them. Right. Now you know that one also, disclosure, please remember. Right. Now we need to take those financial statement are prepared in accordance with applicable financial reporting framework, which is SLFRS and LKSs. Now when it comes to the inventory, in simply put, for you to understand the concept, now you have learned LKS to inventory standard. After learning inventory standard, now you need to show your inventory in statement of financial position, cost to NRE, which is lower. Lower, that is accounting treatment. And disclosure is also there. You need to say, we have written off our inventory cost to NRV, this is the amount. In this financial year, that is how you are going to do. I think you understood that one also. Now completed that. Then the second, that is totally completed. Now we go to the next one. Whether the financial state, the definition I ask you to jot it down the definition. I explain, giving an opinion are four types. Now you jot it down all four also. Then I will be explaining in audit report chapter also, don't worry. But now itself you can jot it down. The second one would be financial statement are prepared in accordance with applicable financial reporting work. Now you have jot it down for whatever the framework also. Now we are going to move to the next one. Whether the financial statement are prepared material statement. Now, the material is kind of a benchmark. Simply, what the materiality is kind of a benchmark that you are going to select from either profit before tax, revenue, net asset, total asset. Those are some few benchmark that you are going to use to determine the materiality. Material is kind of a origin, whatever as per the auditor's judgment, auditor will believe that this amount and above that Origin limit. That means if there is a fraud, if there is a error, if there is a misstatement, sorry, misstatement කියලා දන්නේ නැහැ නිකම්ම කියලා දෙන්න. Error. Well, let's say if there is a fraud above that level, there is the impact to the shareholders. Shareholders are worrying about that level. Okay. Now, in simply we will understand. Let's say you have the invoice wallet and the girls first. You have 5,575 rupees. 5 coin, 20 note, 50 note, and 500 note, and 5,000 note. Let's say, just imagine you lose 5 rupees, 5 coin. You do not care about 5 cares, 5 rupees, just 5 rupees. 20 rupees you lose. About 20 rupees. We are not carrying the 20 rupees. Done. 500 not lost. I cares 500 rupees. I don't care. But suddenly 5,000, you lose 5,000. Then you are starting to screaming and crying and rolling here and there and searching for what we call 5,000 rupees, 5,000 note. Now what will happen then? You are in trouble, right? You are in trouble. Now you have a big problem now. Now let's say if you lose 5,000 and more than 5,000, you are worrying. Why? Those are your resources. Likewise, auditor, as per the auditor's judgment, you are determining the materiality level, and you think that this level and above level shareholders are worrying about their resources. That is the materiality. Don't worry. And SLU is 320. We will be discussing the materiality in detail. Then and there you will understand the concept clearly. Now, misstatement. What is meant by misstatement? Because material misstatement. Misstatement means the difference between what have been reported and what should have been reported. Please jot it down, that one also. The difference between what have been reported and what should have been reported in terms of amount, classification, presentation, and disclosure. I will take an example. For example, let's say you are doing a credit sale, let's say 10,000 credit sales. Now you are going to record it. You are going to debit cash and credit revenue account. Right? What is the amount? 100,000. What the hell this is? Now you report it as what? What is the amount you have reported now? 100,000. What should have been reported? 10,000. From where you need to record it? Trade receivable. Where you are going to record it? Where you recorded it? Cash account. You see the difference. The difference in amount. 100,000. You have been reported 100,000, but you should have been reported 10,000. Then next one, you have reported it in cash account, but you should have reported it where? Trade receivable. There is a difference. That is what meant by what? Misstatement. Presentation also same, Putta. Classification is also same, and disclosure is also same. Right. Now you know them also. Then the financial statement give true and fair view. What is meant by the true and fair view? And I will be taking that one in a separate chapter rather than discussing. But to the true and fair, sometimes you have supporting documents to prove that that transaction has been taken place. But in terms of reality, there is a problem. For example, if we have purchased one meal from Shangri-La, let's say 100,000. Now you have whatever the fictitious or bogus payment vouchers and the cash receipt and whatever the payment vouchers and the invoices bill all, but you are not going to rely on them. Why? Fairness is not there, but in terms of the documents are visible. But anyway, I will be taking this true and fair view later because you need to understand the true and fair view in detail, in depth, right? Now you know that one also. True is okay, but it should be fair, right? Then in all material respect. Now, Putta, we are going to say in the second line, financial statement are free from material misstatement because we determine the materiality and say, but immaterial misstatement can be there. Therefore, in all material respect means what? We are not going to say 100% financial statements are okay. We are not going to do a perfect perfection. We are just say free from material misstatement, but immaterial misstatement can be there. Immaterial misstatement can be there in the financial. That is what we say in all material respect. Our opinion in all material respect. Right? Not only for the material, immaterial also. Then, assertion level. What is meant by this assertion is Putta, kind of a management representation. For example, if you got a statement of financial position, you have the that particular company is having land, building, motor vehicle, etc. Now, assertion level means they are going to say, no, if in the financial statement they have those balances, is they are going to say they have these balances. For example, they have a land. Then assertion is what? You need to see actually whether they have owned this land, then you are checking the land deed. If the land deed is for the company, then you satisfy that land is owned by the company. Now, that is also not enough. You are going to physically see, physically observe that one. Right, right. Land is there. Likewise, there are some assertions. For example, if the client is saying they have a fixed deposit in commercial bank. Now, you are going to see okay, they have a fixed deposit. You are going to see the fixed deposit certificate, FD certificate, and see whose name that particular fixed deposit. Right? For example, revenue, completeness of revenue. All transactions have been occurred, have been reported in the financial statement. Right? There are no omissions. Accuracy. Right? For example, valuation. For example, let's say, for example, inventory. Cost versus NRV, like then write for the asset and the obligation. If you have obtained a bank loan, you need to see there is obligation for the bank, where is the operator. Likewise, there are assertions. We need to go with the assertion to see whether the financial statement give true and fair. That is the meaning of the auditing. I think you have a good picture and you have a short note regarding the definition of auditing. Now we will see for the purpose of importance, main goal, enhance confidence in financial statement through reliability. Then provide assurance on true and fair view of accounts and facilitates better economic decision. An example, audit reports critical for bank loan approvals. Audit reports critical for bank loan approvals. When the bank is, as I explained earlier in my example, when they are going to grant a loan to a company, they are going to see, especially in the financial statements. Right? That is how they are going to decide whether they are going to give a what we call a loan or not. Now, urgency theory, as I explained earlier, urgency theory, owners are principal, that means shareholders, delegate work to managers, managers are agents. Now, you know, Puta, someone is working on behalf of someone else. That means that is known as urgency theory. Due to urgency theory, if it is a private limited company, as I told earlier, if shareholders and management are same, there is no urgency complete. But those people are too different, you have to face this urgency complete. Urgency complete means both parties are trying to maximize their personal benefit rather than common goal. Right. Now, due to this urgency theory, this is the reason why, because shareholders are the owners of the company, management is utilizing the resources. Therefore, ultimately, at the end of the day, to show the performance, management is preparing financial statement, then shareholders is not going to rely on the financial statements prepared by management. Instead, what they are going to do is they are asking for auditor to come to the audit and get audited those financials, and based on the audited financials, they are going to see, this is the performance of our company. That is how we are going to understand that particular concept. Complete arises as managers may finalize personal gain, that is totally fine. Audit which this information gap ensuring credibility. That means always auditors are going to enhance the credibility, enhance the reliability of financial statement through prophecy, because auditors are expert in the industry and they have public trust. We need to protect public trust as auditors. Right. Then you see the example, retail chain expansion decisions was profitability conflicts in Sri Lanka. That is kind of general examples. We will be discussing the examples now. Earlier also I discussed resources owners are different from the party who is utilizing the resources. That's what you need to understand them. Then the professional skepticism. Now, under the professional skepticism, you need to learn basic concept. What are the basic concept here is, now first of all, the professional judgment we learn. Now you see your chartered accountancy syllabus, chartered syllabus. You have knowledge module, capstone, and professional experience. That means what? You are going to complete all 12 subjects. No, it is not enough. You need to complete your capstone also, where you are going to deal with your communication skill, data analytics, and case study analytics. And other part is experience. You must have all three: knowledge, skill, and experience. Why? Professional judgment. When you are dealing with the practical scenarios, you must be able to make decision based on what? Financial statements. To do this, what you are going to do, To do this, what you are going to do actually? You are going to, yes, to do this, you are going to gain experience, skills, and knowledge. Right? Why? In a practical life, you need to make whatever the informed decision based on your knowledge, experience, and skill. You see, when you are going to see the syllabus, you can understand this is why we are going to learn them. What is meant by the professional skepticism? Professional skepticism means kind of attitude, Putha. Write down the definition. Professional judgment also you can jot it down. Professional skepticism means kind of attitude that audit should maintain throughout the audit. Auditor should maintain throughout the audit. Emphasizing question in mind. Question in mind. Always you are going to ask questions. Why, how, what? There is a difference. Why? Likewise, you are going to question in mind, inquiring mind. Second one is being alert to contradictory evidence. Being able to contradictory evidence. Now you know, in financial accounting, you are going to learn financial accounting process. Yeah, it start with what? Transactions, event and transaction. Then what we call the source document, journal entry, primary books, ledger account, trial balance, and financial accounts. Notes to the financial statement and final financial statements. Now, when we are learning that particular financial statement, let's say ledger, as per the ledger, your revenue is 100 million, but as per the financial statement, you have a revenue 150 million. Now, there is a clear-cut difference, no? Critical evaluate. You need to go to the being there to critically, whatever the contradictory evidence you identify. Now, you are going to critically evaluate them. How you are going to critically evaluate them? You are going to find out reason. What is the reason for this difference? You are going to critically, argumentally, you are going to come to a conclusion. That is meant by professional skepticism. Question in mind, being able to contradictory evidence, and critically examines contradictory evidence. That's what meant by professional skepticism. That is kind of an attitude. You need to jot it down. Then prevents overlooking misstatement or fraud. Now that is also there. Ensures audit are rigorous and reliable, especially rigorous and reliable. Case detection of inflated catering invoice at Japna Welfare Organization audit. This has found one of our partner has found this particular error when he was a trainee, and he whatever the delivered this particular whatever the scenario is with us also. So remember, this detection of inflated catering invoices at Japna Welfare Organization audit. This is actually practical incident where you can find in your study pack. Right? That is actual scenario. Because I know, because I have worked that particular partner for a few years ago. Now you see assurance services. Now you need to go to the assurance service. Now you know professional services that improve quality of informations are there. Now level of assurance, reasonable assurance and limited assurance. Now reasonable assurance for external auditing, we are going to give reasonable assurance. You do not require to mention these percentages, but for you to understand the concept clearly, I have added these percentages. Then and there you can understand it easily. This is what meant by this, right? Limited assurance, that means low level of assurance where I compared to reasonable assurance. Reasonable assurance is providing high level of assurance compared to limited assurance. For example, external auditing is example for reasonable assurance, and limited assurance there is agreed upon procedures, review engagement, related services, due diligence. Likewise, there are so many factors that need to be considered under what we call limited assurance. And there is a separate auditing standards also there. SLS RS, right? 2410, right? SLS RE, AE, likewise 3000 standards. Lot of is there. Now, unfortunately, that is not there in our syllabus. In corporate level and strategic level, you will deal with that particular standards in detail. Now we'll go types. Financial statements audit, compliance audit, and performance audit is there. Those are the types of auditing. Financial statement audit also, there are two types: general purpose financial statements audit and the specific purpose. Auditing standards are also two different from specific purpose of financial auditing and general purpose. If you are going to do the general purpose financial audit, you have a what we call the auditing standard range from SLAS 200 series to 700 series. But if you are going to deal with the special purpose financial statement audit, you have one SLA US 800 series. Right? Auditing standards also a little bit different. Now, example, limited assurance on ESG disclosure under SLFRS S1 sustainability standard and S2 climate changes, whatever the standard. You need to have a whatever the in deep analysis when it comes to this SLFRS S1 and S2. Now you see the financial statement assertions, management representation about accounts, assertions, recognition, measurement, presentation and disclosure. Inventory valuation must be complete, accurate and fairly presented, used by auditor to design test. Now, when you are going to perform an audit procedures, Puta, you need to cover what? Assertion. Assertion is, just jot it down, completeness, classification, accuracy, existence, occurrence, right and obligation, valuation, then presentation, disclosure. Those are the assertions. There is a unique meaning. For example, completeness means whatever the transaction have occurred in the financial period have been recorded. There are no omissions. Accuracy, classification, presentation should be used. The non-current, current category should be there. Now, not only that, we need to go through what? The next one, what we call valuation. Existence, for example, inventory. You are going to observe that actually we are, yes, inventory is there. For example, please jot it down in this side or somewhere. Auditor's tool. There is auditor's tool. What are the auditor's tool? Observation. We are going to observe it. Then inquiry. You are just going to ask questions about the client. What is that? Inventory, in the inventory count, you are going to observe that one. They are counting. You are going to observe it. That is observation. Then inspection. That means you are going to check. As I said earlier, you are going to check land deed, certificate of registration. Likewise, you are going to inspect invoices, three-way matching. I think you may remember when you are going to when we were learning processes, we learned three-way matching. Then we are going to inspect them. Then pre-performance. Right, re-performance means bank reconciliation. Client has prepared bank reconciliation. You also perform that one, the accuracy of that particular bank reconciliation. Then recalculation. Client has calculated depreciation. Now we are going to recalculate it and see whether there is any difference. That is recalculation. Other one is analytical review procedures. Now analytical review procedures, you are going to identify what is the trend, whether revenue has been increased compared to prior year or decrease. Right. For example, average. You are going to take some averages. Right, then you are going to identify unusual patterns between whatever the transaction. Last one is external confirmation. That means, if we have a cash balance, we are asking bank to confirm the balance. Then bank will send a direct whatever the letter to you confirming the bank balance. Right, that is how it works. Now I explain almost. That is auditor's tool. Na? That is what you are going to do to perform audit procedures. While you are performing audit procedures, you need to cover the assertions. What are the assertions? Completeness, occurrence, existence, valuation, right and obligation. Those are the assertions. You have audit tool. Based on audit tool, that means you are performing audit procedures. While you are performing audit procedures, cover the assertions. If you are satisfied with the assertion, for example, client is saying, client is having a land. Amount is 100 million. Now you wanted to, in assertion level, you want to ensure that one, for valuation task, you can go for independent valuations, right? If they have revalued the asset, or otherwise you can check the land deed for the ownership, and you can physically observe that one for the existence. Actually, that is there in the business. That's all, right? Very easy, right? The audit process also there. When it comes to audit process, it can be divided into 4 phases actually, right? In large audit firms, they are using audit softwares. In the audit softwares also, they have some phases. For example, acceptance of audit. That means what? We are going to accept an audit, and as per the LKS 200 series, we need to decide that whether we are going to accept the client. At that time, you are going to identify whether there is any threat to independence. Because as a chartered accountant, you will be learning your ethical, whatever the requirement lesson. You have 5 ethical fundamental principles: integrity, objectivity, professional competence and due care, professional behavior, and confidentiality. You need to adhere to them. Right? Not only that, not whether there is a threat. We are going to talk about self-interest threat, familiarity threat, intimidation, self-review threat, and advocacy threat. Right? Self-review threat means self-review threat in the sense, whatever the work performed by you, again you are reviewing it. For example, you are going to write down a paper and marking is also done by you. Ultimate result is you ended up with 100 out of 100 marks. Why? You are the person who is writing the paper, and you are the person who is marking the paper also. Therefore, self-review means whatever the task you perform, you are going to review it again. Then if there is any misstatement also, you are not going to reveal it, whether there is a misstatement. That's the case. Now, intimidation. Senior management. Senior management client is pressurizing you to do that particular change. Otherwise, they say you will sack from your office if you are not doing this particular changes. Likewise, the threatness of client or senior management, senior superior. Then familiarity, long and close relationship with the client, you have familiarity threat. Therefore, you are not going to whatever the, sometimes you are going to whatever the hide some whatever the misstatement with the clients. That problem is also there. Then advocacy, you are not going to promote client shares, you are not going to promote client in a third party dispute in a court, right? Then what is the other one? Advocacy we discuss, self-review we discuss, intimidation we discuss, okay. Now also already almost all done. We understand. Now we are going to see whether there is a threat. If you have any threats you identified, Buddha, in the acceptance audit, you need to take actions to reduce the threats identified to an acceptable low level. If you are unable to reduce the threat to an acceptable low level, you are not going to accept audit. For example, PEP involvement, politically exposed persons, is there, you are not going to accept audit. Right? Those are the concerns. Management integrity. Who is the manager? They are respected, whatever the reputed people, that is the whatever the respectable people. Oh, they are liars, they are the thieves. Because we need to think that before accepting an engagement. Rather, we need to see if we are going to do this particular audit, whether we have adequate resources to complete the audit. That is also a concern. Then planning and risk assessment, you are going to identify what are the risks and what is the materiality, what is the business risk. Likewise, you are doing the risk assessment also. That is why I told you earlier, we are going to make what? Risk-based audit. Under risk-based audit, we need to consider them also. Then we have execution. Under execution, audit testing, evidence collection. For example, the obtaining audit evidence. It should be sufficient and appropriate, right? Sufficient means the quantity of the data, appropriate means the quality of the data. Quality also should be there and quantity also should be enough. Then under execution part, audit testing, mainly you have a test of controls and substantive procedures, right? Test of controls, we are going to identify client processes. As we discuss in the business processes, we are analyzing the process and we see what are the process risk point, or what are the areas that could go wrong. We need to identify what are the process risk point and what can be go wrong. We identify. Then we need to see whether the client has implemented those control or not. We need to understand controls are in place or not. If it is not, there will be a problem. And that is the case. We need to identify. That is a test of controls. Then test of controls are strong. Then auditors will apply. Right, test of controls are okay. For example, they are conducting three-way matching before accepting the good. I am referring to the procurement process where before they are accepting the goods, what they are going to do, they are going to check it. They are raised GRN, right? Then the purchase orders are approved and sent to the what we call to the supplier. Then when they are going to make the payment, they are going to do the three-way match, GRN, PO, and invoice. With after comparing, they are going to payment. Payment is also they have authorization level. After that, they are going to proceed it. Likewise, we have controls, right? I think we may remember spam. So we discussed in the control activities. The spam segregation of duties, physical controls, authorization and approval, management control, again arithmetical accuracy, then organizational controls, then the personal controls. Likewise, we discuss. Now we are going to see those controls are in place. If you are satisfied, if the auditor is satisfied with those controls, then that means auditor is whatever the following control reliance approach. Then control reliance approach. Or otherwise, some audit firms are going to pull substantive procedures. Make it output, right? Audit procedures can be divided into two. Test of controls. Then other side, you have substantive procedures. Substantive procedures can be divided into two. Test of details and analytical review procedures. Test of details means you are going to inspect the documents involved, right? You are going to check the land deed and all things. You are going to inspect the documents. That's what you are going to do, right? Then audit evidence, right? How you are going to do the test audit evidence collection, because you need to see sufficient and appropriate audit evidence. quantity and quality. Quality is good, you ended up with what? Low quantity of evidence. If it is quality is not good, you need to go to the further analysis. That's what you need to do. Then the conclusion and reporting. When it comes to the conclusion and reporting, right? That is the place where you are going to conclude. We are going to modify whatever we need to. Sometimes we need to modify our audit report. We need to provide whatever the details to the audit report. That means amendment. That means additional paragraph. For example, other matter paragraph and the going concern. That is all emphasis of matter paragraphs. Likewise, we are going to modify the report, which is we are going to learn under SLA 700 series, right? Then conclude the audit. Those are the basically 4 stages involving audit. Then example, CBSL requires external audit acceptance before bank audits, right? Now you see the impact of digitalization. Now we will see nowadays everything is going to be talk in terms of AI technology, artificial intelligence, sophisticated technology. Auditor is also using some audit softwares, right, to check the samples. You are using idea. Likewise, then you have a whatever the audit tools. For example, KPMG is using Clara, and video partners is using APT tool, and Lavia, Nimia, or something. I don't know the exact name of the Deloitte is also using some audit softwares. Then EY is also using. People are using audit softwares, right? Rather, they are going for what we call sample selection. Also, they use some technologies. Digitalization change evidence gathering and risk assessment tools. AI, data analytics, and blockchain is also there. Improve efficiency and fraud detection. Example, audit firms in Sri Lanka using AI to analyze large scale transaction and data, because when it comes to public limited companies, number of transactions are very high. Then we need to go to that particular whatever the satisfaction level, we need to see those whatever the inspection. Then you can use a lot of AI tools in nowadays. Now, sustainability reporting, you see communication of ESG performance to stakeholders, financial and non-financial information of your whatever the business. Then the promotes transparency and accountability. In standards, SLFRS S general and S2 climate related. S1 is sustainability standards. In general, those standards. Now, this is actually we need to willingly or unwillingly. That is, we need to make it mandatory to use in your whatever the businesses, right? Then example, Sri Lankan listed companies issuing sustainability reports to build investor confidence, right? Because you are going to say your potential investors, you see, we are following sustainable practices, please invest in our businesses. Therefore, you need to provide what? Sustainability reports, right? We need to see whatever the organizations are in line with those sustainability practices, right? Those are the new trends that we are going to do, right? You see the conclusion. As a conclusion, I told you that, as I mentioned, I will be whatever the presenting the whatever the what we call Excel presentation also, this particular introduction to auditing part, right? Don't worry. Now we will go to the conclusion. Auditing enhance financial statement reliability. That means enhance users confidence, right? Then you can see urgency theory shows need for independent oversight. Then we can go to the professional skepticism ensures audit quality. Now you know what is meant by professional skepticism and professional judgment also. Now you can have assurance service broaden trust beyond financial audit. Then digitalization and sustainability are transforming audit in Sri Lanka. That means the role is changing, right? The role in whatever the labor oriented task and the manual things, whatever the process is changing. Then you can go to the next one. We will see that is the end of the class. Okay, as I told you earlier, Puta, if you have any question, you can raise. Now you know how you are going to raise questions, right? In through WhatsApp group, or you can directly contact me if you have any whatever the further clarification. Okay, you can refer the single medium tutor also, right? In detail, study fact is covered in single medium, but here I have prepared PowerPoint presentation like a short note for the clarity. Then you can just go through them, and if you have any question, you can ask. Okay, then we have completed introduction to the auditing part. Now we need to go to what we call other levels. What are the other levels? That means we need to go through. We at the beginning of this particular lesson, I told you there are 6 parts in that particular lesson, but now we need to go through one by one. We just completed our introduction to auditing part. Now we will meet with what? Other part. That is what we call, as I mentioned earlier, you can have this, right? Assurance services.